Well, in response to the RBA's decision to hike interest rates by 25 basis points, our next guest talks about how the rising interest rate environment will impact the housing market. Carl Hammerschmidt from Joust is here today. Carl, thanks for your company. I suppose the first question has to be naturally what you made of that particular decision that we got today. Did you think it was reasonably sensible or justified?
Oh, look, I think it wasn't a very big surprise for a lot of people. It was either going to be 25 basis points or 50, and I think what you're seeing is a bit of empathy being shown by the RBA for consumers going into Christmas time. Look, I think they're waiting to see the impact of the last 3 or 4 rate rises, and wanted to go a little bit more gently just in the lead up to the Christmas period.
Yeah, absolutely. And see how those rate hikes already implemented have played out. But what about the impact on the housing market? What's been going on there? Because we have seen big drops in prices. However, maybe the panic and the hysteria that sometimes you might associate with a 10% drop, at least in house prices in Sydney, yet to really materialise. What's your gut feel as to what's going on here?
Look, what we're seeing in the Joust platform with regards to, I guess, consumers seeking home loans is we've seen double-digit drops across the board with regards to refi, buy, and also invest in terms of the size of the loan. So I think consumers are really taking a bit of pause in this kind of market and just looking at the uncertainty that's going on out there, and that's being reflected in the loan sizes that we're seeing coming through the Joust platform.
Interesting. I mean, I'm not sure if you've got data to go back or if there's any meaningful correlation at all, but I mean, do you tend to find that when you do see a drop in that sort of activity that it does correlate fairly well to continued declines in house prices or even things like clearance rates, etc.?
Look, absolutely. We can see a direct correlation between the way that that consumer behaviour in terms of seeking new home loans is flowing on into the market. We recently did a survey with 1,500 brokers that went out to 1,500 brokers, and 75% of them believe that the mortgage repayments are going to be significantly impacted, and that's going to have a real big flow on to property prices and property costs over the next few quarters.
Yeah, most certainly. So, I mean, what sort of stress do you think we're going to see on individual households and consumers in particular from these rate rises? I know from my personal experience, the rate hikes are only really hitting now. Is there those sort of signs of stress potentially emerging, especially now that we have had all of these hikes over the last sort of 4 or 5 months, as well as, what's probably likely to be another few to come in the next few RBA meetings?
Oh, look, absolutely. I mean, we work with a research and data company called DFA, Digital Finance Analytics, and the data that we work with them on has shown that there's been up to 25% increase in the number of households that are facing real mortgage stress over the last few months, and that's only going to be continued over the next few months. If we get another 25 or 50 basis point rise over the next few months, the number of households in actual mortgage stress is going to continue to grow, and that's literally in the volumes of hundreds of thousands of households.
Yeah, without a doubt. What about the broker side of the equation? I mean, I understand that you get a little bit of information on how they're faring. Obviously businesses certainly not as robust as what we saw a couple of years ago. What's the impact on brokers right now?
Look, I think they're finding that the deal flow is really starting to dry up a bit. The leads and the consumer intent is a little bit more uncertain, and they're going to work much harder to build their pipeline and to build their customer flow over not only over this Christmas and New Year period, but going into next year. Of the brokers that we surveyed, 50% believe that the cash rate's going to go to 4% or more, and that's going to have a real significant impact on their business going into next year.